Raoul Pal, founder of Real Vision and Global Macro, took to Twitter recently with a series of tweets regarding the yield curve and his concerns on the future of the crypto markets. Raoul suggests that the yield curve seems to be acting out of character, which can potentially trigger a significant recession. In his first tweet, Raoul says that you will label this as chart crime, but the year-over-year change in 2-year rates is absurd. The steeper curve highlights the sudden rise in bond rates in 2 years, which results to simulation in the economy. Historically, steep yield curves has indicated the beginning of an expansive economic period. Yet, it indicates also that long-term yields are rising at a much more faster rate than short-term yields. He further tweets, if you did fix in 2-year rates in the crisis and took on leverage, the cost of servicing, it is up a lot. If leverage is high, the absolute level of rates isn't what matters 100%. This might not be the biggest factor, but is important in terms of economic impacts over time. Raoul's tweet indicates that even if there is a good chance of recovering from the high bond yield, the high leverage that it would result in may have a greater economic impact over time. By comparing the current yield curve to one that happened in Japan in 2010, Raoul predicts that the system is either out to correct the market defects, or we may be looking for similar situations, such as Japan's yield curve in 2010, which the country still hasn't recovered from. Next, he tweeted, there is something interesting about this rate cycle in the yield curve. Normally, it doesn't really flatten until a couple of years post-recession, and normally at 250 basis points. Now, this could be a correction, but if it breaks this line, it suggests a shorter cycle than normal. Raoul indicates that the curve does not directly point to a potential recession, but it is clear that there is an impact in the bond market similar to what occurred in Japan. If we look at the rate cycle, it can help us predict whether a vast collapse in the bond yield rate will occur or if this was just correcting the crypto market defects. While the yield curve has shown lower rates than normal, Raoul mentioned that it may be time for people to buy assets rather than sell them. Raoul tweeted, soon it will be time to buy bonds. Where diamonds? Not yet, but it's coming to a trading screen P&L near you soon. Probably the setup coming this early summer, late spring. Further, The Economist newspaper wrote that in case the yield curve line somehow breaks or flattens, the rates may shift the equity market in the long term. The rates may even rise later in the yield curve, but there is an outside chance of that happening according to Raoul, as there is no definitive forecast based on the macro analysis which he has highlighted in the 7-tweet series. But he concluded on a positive note, saying that no action points right now, but just observing if the yield curve in the US flattens, breaking the line, it suggests that rates can't rise much, and that will shift equity market structure back to long duration growth, as GDP growth is less likely to be supportive of cyclical swatching. Let us know what you think of Raoul's analysis. Do you think this will have a tremendous impact on the crypto market? Do you think that we're heading towards a potential recession? If you want to listen to the full interview, click on the link provided in the description. We would love to hear your thoughts. Comment down below. If you found this video useful, please hit the like button. It only takes 1 second, but it greatly helps the channel, and more importantly, it helps YouTube find someone similar to you who wants to stay up to date in the world of cryptocurrency. If you're new to the channel, don't forget to hit the subscribe button and bell notification. Thank you for watching Daily Dose Crypto.